Wall Street may be feeling a bit of deja vu as meme stock frenzy hits once again. That's following the return to social media of Keith Gill, who's also known as Roaring Kitty. He's the investor who drove meme stock mania 3 years ago. Now, since Monday, GameStop stock has seen its price soar. The video game retailer's share price surged by around 80% in early morning trade on Tuesday and closed at nearly 60% higher. GameStop's valuation has nearly tripled since the end of last week. Meanwhile, cinema chain AMC is also being pushed up by retail traders. It was up more than 30% at the close of trade on Tuesday. So, this has a lot of people talking. And let's talk more about GameStop and all things meme stock related. And for that, we're now joined by Matt Maley. He is the chief market strategist at Miller Tobacco and Company. Thanks so much for joining us. We certainly appreciate it.
Thanks for having me.
Okay, let's kind of cut right to the chase. For the uninitiated, the unclean here, walk us through what is happening, what happened, 3.5 years ago when the popularity of GameStop stock, that's not easy to say. First, who is behind this? Who is the so-called Roaring Kitty? And he was really out to kind of make a point.
Well, I mean, one of the things that happened 3.5 years ago when this all took place is that you had a couple of stocks, GME, GameStop, and also AMC, and BlackBerry, another one. And it's funny how those are the three stocks that have also done well this time around, but GameStop leading the way. But what happened is the short interest had built up in a huge way. In fact, believe it or not, the short interest in GameStop was 125% of the float. In other words, there are more people were shorted than shares that existed. How in the world that could happen is hard to say. But the point is, when this guy came in and kind of said, we can squeeze these people who are short in a big way, the whole thing just fed on itself, and these stocks just took off. And we're seeing a similar thing this time around, although the short interest is dramatically lower than it was 3.5 years ago. So it'll be very interesting to see how much longer this lasts.
Okay, the old guard didn't like this. They said that that the rules were basically being bent, and critics said, you know what, you guys, the old guard, have been doing this for decades, so what's wrong? So talk a bit about the retail investors and meme stocks and really what they're trying to do. They're really trying to make a point.
Yes, absolutely. They're just saying that when you get some of these people that, the professional traders and the institutions have been doing some things for a long, long time that the individual investor couldn't take advantage of. Now they're saying, hey, you get a little bit of taste of your own medicine. I mean, in today's marketplace, the individual investor has so many more tools at his disposal. They have weekly options on all the major stocks. They have daily options on the indexes. They have ETFs, leveraged ETFs, inverse ETFs, all these different things, and they can finally play with the big boys nowadays. And so they're trying to put the screws to them a little bit, and they're playing that game again this time around.
In the spirit of full disclosure, I know a little bit more about this than I should, because my kid has been into this, and he held his stock for 3.5 years and unloaded it and made kind of a small fortune. So is this GameStop resurgence, is that going to lead to the return of other meme stocks?
I don't think it'll last as long this time. Number one, again, these things aren't as, the short interest isn't anywhere near as big as it was 3.5 years ago.
Right.
The other thing we have is that it was been taken advantage of a lull in the marketplace. I mean, we still have plenty of liquidity in the system, but at the end of last week, if you look at the QQQ ETF or the SPY ETF, then the volume absolutely plunged at the end of last week. People just came back and said, hey, I'm going to wait back and see and sit on my hands for a while and see what happens in the with this CPI number that's coming out tomorrow.
Right.
Well, that's good for a couple of days with these day traders with nothing to do. And when these meme stocks took off, all of them, instead of being in 50 different stocks, all went into 1 or 2 stocks, and they all came up. Once we get past the CPI and the rest of the investors have a little bit better feeling of what's going to happen next, I think things will level out and people won't be focused on just these 2 or 3 stocks.
And again, what I do know about this, Roaring Kitty put a few things on social media, which he had not done in years, and that really got this sort of cult of personality kind of thing going. So how are pro traders reacting to all this? And do you think by Friday this is going to be a footnote?
I think there's a good chance that it will happen quickly. I mean, that becoming a footnote will happen quickly. Again, I think because people have been focused on nothing and sitting on their hands, this gave them something to focus on. Once we revert back to normalcy after the CPI number, and we also get some retail sales numbers and some retail sales numbers out of like Walmart and such,
Right.
we're going to people will go back to normal and people won't be focusing on what GME is doing because there is absolutely zero, and I mean zero, new news out in the stock. It's one
Right.
thing to say, hey, there was some new news and the stock overreacted. This is the epitome of overreaction.
I think that we can all kind of agree the thing that drives prices are earnings, and that's really what people are going to get down to the core of. Do you think that there's a kind of a dangerous side, not dangerous, but just kind of a reckless side, if you will, that someone trying to kind of twist things? Because I saw one of the postings, and it was Ferris Bueller saying, "Go home, it's over," and then a clip of another movie saying, I'll tell you when it's over. And these people out there who follow Roaring Kitty just kind of live for these moments.
Yeah, and I'm sorry to say, but it's not the sign of a healthy market. I mean, it's not. So I know that on Monday people were saying, "Oh my gosh, this is a sign of a top. Look at all this craziness in the marketplace." But 3.5 years ago, when it took place, this thing happened in February and March of that year, and the market didn't top in 2021 for another 8 months. So this could go on for a while. I don't think it will go on as long this time around. But the market is expensive, and interest rates are higher than they have been, even
Yeah.
though they've come down a little bit recently. That makes it just a sign of froth in the marketplace, which isn't necessarily the healthiest thing for the intermediate term.